network. So Caroline, I would have thought we'd see a bigger move in NVIDIA, but I'm not complaining about a 3% gain so far this week.
Hey there, Jenny. Yes, NVIDIA higher once again today. Just to be clear, too, these aren't any export controls related to China. These are a set of rules that actually hadn't gone into effect yet. They were set to go into effect on the 15th, and we're hearing news that President Trump and the Trump administration is planning to rescind essentially these Biden-era, if you will, chip curbs. They were meant to really limit the export of AI chips worldwide, and so it's called the AI diffusion rule. It was set to go into effect on May 15th, and it essentially organized countries into 3 tiers, all of which have different restrictions on whether AI chips made by companies like NVIDIA or AMD, Intel, could be shipped to those countries without a license. So it's all part of a broader effort to revise global semiconductor trade restrictions. We know that these rules have drawn opposition from tech companies like Microsoft and Oracle. They've argued that they would harm American companies' business prospects abroad without doing much to hinder China. We've also seen some foreign governments opposed to them as well. So, we had seen reports. The Commerce Department has come out and made comments on the reports that that framework won't go into effect on the 15th. Instead, the Trump administration is actually drawing its own framework up. According to Bloomberg, the rules are likely to focus on direct negotiations with nations like the UAE or Saudi Arabia. What we don't know, though, is how strict this new framework of rules is actually going to be. We know President Trump is going to the Middle East next week, so we'll see if there are any developments on that front, especially since, according to Bloomberg, those are some of the countries that the Trump administration is focused on. I did see a Raymond James analyst quoted as saying Trump will increase the total amount of chips allowed to be sold globally, starting with Saudi Arabia and the UAE, but this could also come with more enforcement to prevent the diversion of banned chips to China. So kind of bullish on one sense, but there could be reasons for caution. NVIDIA came out with a statement saying, we welcome the administration's leadership and new direction on AI policy. With the AI diffusion rule revoked, America will once again have a once-in-a-generation opportunity to lead the next industrial revolution and create high-paying U.S. jobs, build new U.S.-supplied infrastructure, and alleviate the trade deficit. So, I do think it's important to note that this has nothing to do with the export controls in place for China. And we know that based on what we've heard from NVIDIA CEO Jensen Huang and AMD's CEO Lisa Su, both were on CNBC earlier this week, and they talked about the potential loss of not being able to conduct business with China on the AI front. Jensen Huang had said not being able to sell to China, where he expects the AI market to be worth somewhere in the $50 billion range in the next few years. He said that would be a tremendous loss. AMD CEO Lisa Su said there should be a balance between export controls for national security as well as ensuring that we get the widest possible adoption of our technology. That's a good thing for U.S. jobs and the U.S. economy. So, there's definitely some pushback against some of these tech companies as well as it relates to China. But overall, in terms of these AI diffusion rules, it does look to be giving NVIDIA a boost, as you said. Shares up a little less than 1% right now, up about 3% this week. Still in the red when you take a look at the year-to-date performance, down about 12%. But we're seeing names like AMD, Intel, pretty much strength across the board when it comes to the AI chip trade today.
Over the past 2 years, NVIDIA has experienced a new wave of growth aided by the AI revolution. Since NVIDIA has continuously produced record-breaking results, investors have generally applauded the company. But the stock has declined since February, raising concerns about whether investors have moved on. So far, 2025 has been a rather exciting year for the stock market. The Nasdaq Composite crashed by 21% at one point, while the S&P 500 fell as low as 15%. Although there have been some effects on the capital markets this year from news of the Chinese artificial intelligence, AI startup DeepSeek, and a range of economic indicators, I believe the Trump administration's new tariff policies have contributed the most to the volatility by far. Mega-cap technology stocks are among the largest laggards in the S&P 500 and Nasdaq, which both had negative returns for the year despite having recovered from their lows. As of this video, NVIDIA's market value has dropped by around $1 trillion in 2025. In fact, a sell-off of this magnitude would indicate that investors have lost interest in the once-hot semiconductor darling. Is it a good idea to purchase NVIDIA stock now that its fiscal first-quarter earnings announcement is set for May 28th? Later this month, when the company releases its first quarter report, learn what history predicts should happen. The fluctuation of NVIDIA's share price over the previous 3 years is depicted in the figure below. Earnings reports are indicated by the purple circles with the letter E in the middle. The stock of NVIDIA has increased right after an earnings announcement for most of the past few years. On a broad scale, this would imply that NVIDIA stock might be well positioned to carry on its winning run. Regretfully, there is one important detail to consider before thinking that NVIDIA stock would increase once more. When NVIDIA released its financial results for the fourth quarter and the entire year 2024 in February, it was the most noteworthy exception to the company's post-earnings shocks. As of this video, shares have decreased by 13% since the company's earnings announcement on February 26th. There are some crucial facts to talk about, despite the fact that the sharp decline in NVIDIA stock since the company's most recent earnings announcement may seem startling. The earnings report wasn't a problem at all. Back in February, NVIDIA's new Blackwell GPU architecture was the big deal. In the fourth quarter, Blackwell generated $11 billion in revenue, exceeding management's own projections. Even better, NVIDIA's management stated that it anticipates a year-over-year increase in the company's gross margin as the Blackwell ramp-up continues to grow. Additionally, management praised a range of successor GPU architectures, such as Rubin and Blackwell Ultra, which I believe should support NVIDIA's continued strong growth prospects in the next years. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Further adding to all of the positivity on the macro front that you and Kevin just talked about is some positivity out of the Trump administration saying that it plans now to rescind some regulations that are expected to limit exports of AI chips worldwide. Now, per the Wall Street Journal, who first reported this story, the Commerce Department said on Wednesday afternoon it does not intend to implement now AI processor restrictions that were drawn up under the Biden administration. The curbs were set to go into effect on May 15th. And would have limited sales more widely than the existing sanctions on the exports to China. So this is huge. The so-called AI diffusion rules were expected to reduce the long-term market for AI chips by an estimated, per B of A, 10%. So NVIDIA said already in an emailed statement, we welcome the administration's leadership and new direction on AI policy. With the AI diffusion rule revoked, America will have a once-in-a-generation opportunity to lead the next included industrial revolution, they said. So, however, I do still want to mention, isn't it clear whether we will see this lead to alternative rules on chip exports, which could potentially mean even more concern. But as of right now, the White House has considered including AI processor limits as part of its bilateral agreements with individual countries. But more information is expected to come as President Donald Trump does have a planned visit to the Middle East next week, where AI chip exports are likely to be on the agenda. So there is the general expectation that right now, under Trump, we will see the increase of total chips that are allowed to be sold, which begins with some of the relationships we have right now with Saudi Arabia as well as the UAE. So while China does still remain a bit challenged, this is definitely a sigh of relief for a lot of these chip makers and AI-related names. As NVIDIA, you can see shares have been pretty handily higher this morning.
Yeah, I mean, we heard Jensen Huang actually asking for this just a few days ago, sort of getting out there and clamoring, how about you lift some of the restrictions, repeal some of the things that are hindering our ability to do more deals. So that's good. This group could shine today. And folks have been a bit frustrated, right, with this group. And they wanted to know what happens with NVIDIA. We'll hear from NVIDIA later this month, but how much share they may have to give up to China now, maybe that helps a little bit.
I definitely think that this helps, and especially because as we know, the street doesn't like uncertainty. So this looming May 15th deadline now perhaps being cleared, although we need to hear officially from the White House. I definitely think this is a huge win. And I mean, you look at even names like AMD, which is also getting a nice lift today. AMD has risen now about 1.5% on the week, excluding even today's move. NVIDIA has actually quietly had a pretty decent week, up 2.25%. So while both of these names remain well off of highs, I definitely think this is a step towards the right direction in rewriting some of the negativity that unfortunately has clouded these names without any fiscal value being tied to it. I know NVIDIA said $1.5 billion they expect to be seen as an impact as a result of China, but right now, at least maybe clearing this hurdle is a sigh of relief for a challenge space at best.
Yeah.
Why has NVIDIA's stock been dropping for months when there has been so much positive news about the company's operations? As I mentioned before, investors are concerned about NVIDIA's expansion due to the uncertainty surrounding tariffs and new export restrictions pertaining to the Chinese market, which is a significant source of income for the company. Although I can appreciate these worries, I believe they are exaggerated. As an investor, I'll be paying particular attention to how the secular trends driving AI infrastructure affect the company's long-term prospects in light of the tariff environment and short-term challenges in China. Investors have seen a preview of other top AI companies and how they are handling the prolonged volatility caused by tariffs over the past few weeks. Microsoft, Amazon, Alphabet, and Meta platforms have all released their first quarter 2025 financial results. These businesses are united by their shared emphasis on AI infrastructure. Together, these businesses anticipate investing hundreds of billions of dollars in data center expansions this year. It seems to me that large tech businesses would not be stepping up their AI roadmaps at this time if tariffs were a longer-term issue or a business mission-critical issue. I believe NVIDIA is still in a strong position and will allay investor concerns about long-term growth because all of these businesses are NVIDIA clients. Consequently, I believe that NVIDIA's stock may surpass projections and start drawing in growth investors once more. For growth investors who plan to hold the company for a long time, I believe that NVIDIA is currently a strong time to purchase. Over the coming years, NVIDIA's stock should rise as a result of data center construction expenditures. Over the next 5 years, Taiwan Semiconductor's management anticipates tremendous growth. Despite the fact that the market is beginning to rise somewhat from its recent lows, nothing can stop the Federal Reserve or White House from making another announcement that might cause the market to plummet once more. To be prepared to act in the event of a market crash, you should maintain a short list of equities that you would buy. Taiwan Semiconductor Manufacturing and NVIDIA are the two stocks at the top of my purchase list. These will be some of my first purchases if there is another significant decline. Graphics processing units, GPUs, the computational powerhouse of the majority of our artificial intelligence AI models, are manufactured by NVIDIA. Numerous estimates place NVIDIA's market share at around 90%, indicating its dominance in this industry. NVIDIA is at the top of my shopping list since it is a wise investment strategy to purchase leading businesses in important industries. NVIDIA GPUs are in high demand right now due to a multi-year build-out cycle. According to third-party data that NVIDIA uses, capital expenditures for data centers might surpass $1 trillion by 2028, having reached $400 billion in 2024. A portion of the market remains somewhat gloomy and believes that if trade wars intensify, this spending binge will end. However, the terminology used by NVIDIA's biggest clients during their conference calls seems to suggest that data center spending is moving forward at full speed. Given that NVIDIA's stock is already down about 25% from its peak, I don't think investors should wait for a market meltdown to purchase its shares. Investors should be even more excited because the company is currently trading at the lowest forward price-to-earnings ratio it has experienced in the previous year. It is just slightly more expensive than the S&P 500, which is valued at about 21.1 times anticipated earnings at its current level. Even though NVIDIA is still a wise investment today, I'll buy it first if the market plummets. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
The general feeling is that this is ahead of those meetings in the Middle East, perhaps sort of a positive step for those negotiations. But in the grand scheme and sort of the general landscape that seems to be laid out, it does seem like a strategy of sort of isolating China on the trade front. We got the UK deal now, softening of some of these rules, maybe for some of these other countries. And it does seem that the focus, whether or not it's being explicitly said or not, does remain on China, as it was the first time around.
Yes, and I mean, we've heard some of the rhetoric coming from the White House too, as it relates to even the conversations that are going to happen in Switzerland between the U.S. and China this weekend. As it, they're basically saying don't expect a trade deal, just expect trade de-escalation from those 145% tariffs. So both the commentary out of China and the U.S. is holding pretty firm. I don't think that there's going to be a lot of development on that front, and that's why I think it's important to note that these export controls don't have, this diffusion doesn't have anything to do with those export controls from China. I mean, we'll have to see how it plays out, of course. I mean, if you take a look, analysts still very bullish on a name like NVIDIA, despite the fact that, the U.S. is cracking down hard on China as well. So it doesn't seem to be changing the bullish calls from a lot of these analysts, doesn't seem to be changing the overall AI story. But, when you hear from the tech executives like Jensen Huang saying it could be a tremendous loss, I mean, I do think that's important to know.
Yeah, and I completely agree. And I think also a good point that there's still heavily unknowns that are circulating in NVIDIA, which is maybe why we actually aren't seeing more of a move today. This was, I think, somewhat expected to be at least revised by the Trump administration. So great takeaways there, and great look at NVIDIA and the rest of them.
Recent weeks have seen a surge in growth stocks, which is often excellent news for Cathie Wood. The ARK Invest family of exchange-traded funds, ETFs, has momentum behind its creator, CEO, and stock-picking prodigy. Though starting lines matter, her largest fund has risen roughly 30% since bottoming out last month. To return to its peak 4 years ago, that same fund would need to more than triple. On Wednesday, Wood made a good deal of purchases as the market rose. She increased her holdings in NVIDIA. A study in contrast is the third most valuable firm in the nation by market capitalization. Over the last 5 years, it has been a 13-bagger that has changed people's wealth. But in 2025, it lost 13% of its worth. Since reaching all-time highs earlier this year, the manufacturer of artificial intelligence, AI chips and graphics processing units has seen a 24% decline. It appears that Wood sees a chance to purchase additional shares for about a quarter less than they were selling for when they peaked 4 months ago. On Wednesday, she increased her ownership in NVIDIA in almost half of ARK's growth funds. That does not imply that she is correct. In recent months, challenges have surfaced even though the company has the top spot in the growing demand for AI chips to advance language learning models. The first setback occurred earlier this year when DeepSeek, a Chinese company, revealed that it could produce respectable generative AI results without investing in the newest NVIDIA technology. The U.S.'s global tariff rollout, especially the stalemate with China that has led to chip makers warning of significant one-time hits, is currently the biggest hit. Last month, NVIDIA disclosed that it will have to pay up to $5.5 billion for products that are currently prohibited from being sold in China. It will be another 3 weeks until NVIDIA releases its quarterly results. Investors continue to hope for robust growth. Analysts predict a robust 65% increase in NVIDIA's sales, which will surpass $43 billion. Earnings per share should increase by 46% to $0.81. Wall Street experts have only slightly lowered their growth projections from now to the end of fiscal 2027, despite all the commotion. Given NVIDIA's recent decline in comparison to its growth trajectory, the shares could be a good deal. The stock is available to investors for little more than 20 times the anticipated earnings for the upcoming year. Clearly, it is still expanding far more quickly than that. Although semiconductor stocks are cyclical, the AI revolution is still in its infancy. Here, Wood is an ARK buyer. It does not imply that she is incorrect. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
All right, Kevin, we have 30 minutes to go before that closing bell. Sounds like maybe some new levels to talk about because we're way off the 5,600, 5,630, 5,640 levels that we've been talking about.
Yeah, now we have cracked through the 5,700, and that's actually a really big milestone here. We're only a couple of points, maybe about 30 points away from the 20-period moving average or 200-period moving average for the S&P 500. So we're getting fairly close, around 40 points. My apologies, getting fairly close. But going into the close, what do you want to see? 5720 is going to be kind of that first layer or that area of potential resistance here. A lot of activity there, especially early on in today's session. You are seeing maybe some opportunity here to try try to break through that and get to 5750. Could it be possible? Maybe we do see a squeeze, but we also have some pen risk sitting at 5700 here. Any type of further breakdown or any type of breakdown to the downside here, area that I'm looking at is around 5660, and that's right below, right above that negative pressure area where you see a lot of negative positioning here for the market. But overall, we actually look pretty decent. We did set up a little bit of a head and shoulders pattern. It's a little bit lopsided there over the last 15, 20 minutes or so, but we were able to break above that. But we do have that neckline to be mindful of. If we kind of break through 5680, maybe it becomes a little bit of a concern, but right now seems like we're holding up. You would like to see that market on close order number really coming in fairly aggressive on the buy side to try to get you that rip higher, but 5720, 5725 could be in the cards for the close here today, Caroline.
Okay, not quite there yet. We're at 57.06, but we'll keep our eyes on that in the final 30 or 28 minutes of trading. I know you're also watching gold and silver. No flight to safety today. Both are lower.
Both are lower, but silver is actually still relatively outperforming gold. And this is something that I brought up earlier this week and even last week. So I like to do a little bit of a check back for this chart here. You're starting to see more of a consolidation or potential reversal pattern when it comes to this gold to silver ratio compared to the S&P 500. When you kind of go and look at the past here, this has been a really good indicator as far as overall bullishness or risk on in the marketplace. When you have silver outperforming, it doesn't mean silver has to go up. It just means that it has to do better or fare better than gold does. Silver is more of a economic growth type of metal, if you will. Also has precious metal properties here, but mostly it's utilized for economic growth as an indicator there. So we are starting to see that hinge. You could even say it's a little bit of a head and shoulders pattern if you're looking at that orange line there. And if we do see a little bit of a breakdown, I think that also coincides with the S&P 500 moving higher. We also are kind of looking at the S&P 500 weekly chart. I think it's really important for us to kind of touch on this today because of the moves that we have seen to the upside. The CCI has actually now crossed that momentum line or that zero line for the S&P 500, and that is generally bullish. And when you kind of look in the past, anytime that we've had a consolidation of the downside, a break above that momentum line or that zero line for CCI for the S&P 500, we do generally see a continuation of at least 3 to 4 weeks of positive gains for the S&P 500. Even if you go back and look at 2022, where we had a break above that momentum line back in July or so, yes, we did make new lows eventually, but even crossing that momentum line, it also coincided with around 3 to 4 weeks of positive gains for the S&P 500. MACD is also hinging and looks like it wants to cross here in the next week or 2 weeks. That's also bullish. So the daily chart did show maybe some fracturing here when it came to the market because of the stalling out over the last couple of trading sessions, minus yesterday, last couple of trading sessions here. But the weekly charts still are holding up for the most part to signify that, hey, maybe we do have a little bit of a pullback, but the traditional trend or the trend right now, primary trend, especially with that CCI indicator, is kind of pointing towards a continuation for this market to the upside right now.
Okay, so could be a good few weeks. Kevin, can we gauge anything about potentially the longer term and what that could look like based on these technical levels?
Obviously, there's a lot that can actually happen here. It seems like the market is really going to discount or has been really discounting the economic effects of tariff policy. And we probably won't see any impacts for another couple of months here. If that's going to be the case and the hard data still holds up or shows relative strength for the economy as a whole here, the market once again may discount that. So if you're looking at this right now, barring any type of major economic slowdown over the next 3 to 4 months, which remains to be seen, technically you're saying that yes, we've seen the bottom. We are making gains to the upside here, and this kind of tells you that I would not be surprised if we do try to test those all-time high levels in the next couple of months. At this rate, we could be testing an all-time highs in the next 3 or 4 weeks. The next couple of months, this chart is saying that could be a possibility, especially when you get that MACD cross at the bottom there. Once that cross actually does occur, that's an algorithmic trigger as well for those that are actually programmed for that MACD. But that's also a trigger for buyers to really step in here.
Okay, you know, in the next couple weeks, if we start to see a sell-off, I'm going to say, but you said, just kidding.
Well, if you want me to, if you want the market to go down, I can be bullish. If you want the market to be to go up, I'll be bearish for you. So I'll still say be cautious. I would still be cautious because of the economic data, but the technicals obviously say otherwise. And we follow the charts and we follow the data, right, Caroline?
Yeah, we do. All right, and I follow what you tell me here. Tell us what else is on your radar heading into the close.
Yeah, last thing I will say, okay, if you want me to give a little bit of a bearish sentiment, VVIX, so we're looking at the vol of volatility, right? And if you're kind of looking at that metric, this is measuring volatility of the VIX index itself. We are actually getting to, let's say, the levels that we were at before Liberation Day, right? We are seeing a normalization for vol of vol. Now, volatility, if you're looking at the VIX itself, still a little bit elevated here, but vol of vol has come down. Two things, that is bullish, but we are getting to a level here where I would, it's fairly cheap to actually buy out of the money protection if you're utilizing VIX options, because we are actually below the one standard deviation average or range for the VVIX over the last year. Usually once we get to these closer or these depressed levels or these low levels here, it's easier to actually ratchet that back up to the upside because it's a exponentially, it's an exponential oscillator, if you will. So for the most part, that has been bullish, and it is bullish. But once we get to these extreme levels for the VVIX, you start talking about that 90 level, probably would be interesting to try to maybe buy some volatility protection at that point because we're getting close to those low levels.